Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. We are back after taking a week off, so hopefully we're going to be back with a bang. What we're going to do in this video is I'm really just going to say hello to everybody, do a bit of recapping on the last week. Even though I wasn't making content, I was trading, I was watching markets. We're in a number of trades that are going our way currently on altcoins to the short side, and then we're going to look moving forward. So I'm going to do a bit of reiterating my bias since markets have really been rallying. I think really in regards to the cryptocurrency market, since maybe the 13th of June onwards, we've maintained a bias that this is nothing more than a relief rally in a broader bear market. And the bear market, the crypto market at the moment, is really driven by the macro. I still think that's a very bleak outlook. So I don't want to depress anybody on a Monday, which is already quite a depressing day for many that have to go back to work. But I'm just telling you guys what I see here. And we've been reiterating this. And we're still not proven right. You know, at the end of the day, maybe crypto finds its feet here and continues to go upwards. But what I'm going to do whilst I'm recapping is show you, get into a little bit about the dollar, which has been pulling back after running parity with the euro, some key levels. That's allowed the cryptocurrency market and the risk on asset market to really go up. We've also seen record shorts get squeezed. We've also seen record short covering. We've also had people try and reprice interest rate hikes and the whole shebang that comes with that. So there's been a lot going on, but this rally is very explainable and plausible. And that concerns me. And for me, when I look at this rally, if this was the generational bottom of the bear market for crypto, I think we'd have seen a bit more of a reaction to the upside than we have. It's actually been rather weak. So we'll start with a recap, and then we're going to get into a number of interesting things. We'll be talking about the bond yield curve. It's going to be a longer video just because I haven't spoken to you guys in a little while. I'm happy to be back. You know, I love doing this. But every now and then, you know, it's good to kind of take a break, refresh, and come back with some refreshing, bright content that you guys can sort of devour. We're going to be hitting it hard in the coming weeks, guys, in regards to content, certainly going into the winter months, September, October. We've got lots of content coming out on a variety of things, getting more into trading and a number of other things. Like I said, we're short a lot of altcoins at the moment and have been for a while. So let's do some recapping. So Bitcoin, and not just Bitcoin, we'll pull up the stock market. So we'll pull up the NASDAQ and we'll just do the SPX. You know, we've really been rallying since the sort of 13th of June. Everything has been doing that. Number of reasons for this: record short covering, you know, lots of shorts getting squeezed. Everybody was too overly bearish. Markets will often go towards pain. So if everybody is on a trade, it will go the other way typically. And that's kind of what we've seen. We've also seen, you know, news of a recession, GDP growth coming out negative 2 quarters. We've seen the Fed do a 75 basis point rate hike. We've seen them do a number of things that should be bearish for markets, but they've actually took it as bullish because what they're doing is they're looking down the road and they're going, okay, well, they're not probably going to do another 75 basis point rate hike. There's been a few members within the Fed, by the way, that have said that you know, they would be in support of that. But even I don't think that's likely. I think maybe they go 50 and then they sort of, you know, sort of slow it down. But the issue here is people are taking that as they're stopping and they're now going to start stimulating. That isn't the case. I think they're going to hold rates higher for longer as we have a more persistent, continuous inflation. Okay, so we also had a lower CPI print, which has got everybody bullish. That's for the US. Go and look at prices in America. Europe. Go and look at prices across the world, the UK as well. This was an interesting one, actually, from, I think, Citigroup, talking about the fact that UK inflation will hit 18.6, according to Citigroup. And it talks about England's Zalia, and obviously a reference to... I can't think right now, guys. It's Monday morning, been a long day already. But anyway, so there's lots been going on. And during this time period, during this rally, the dollar has actually been very supportive of this move in regards to the fact that it's gone down. So when you're looking at Bitcoin, you're looking at it in comparison with the dollar. Remember, all markets are driven by liquidity and money. One reason we've got a somewhat bearish outlook is because we think that liquidity is drying up. We're essentially in the opposite of what we were in from March 2020 onwards, when the Fed were just chucking money at everybody. You know, oh, you've got a business, here's 100 grand, you can go buy yourself a Lamborghini. And you know, we're now at the kind of hangover from all that. So during this time period, and we'll drop down to the daily, dollar ran parity, and it's now been pulling back. That's supported and allowed the cryptocurrency market to rally. Not just the crypto market, but markets across the board, okay? So you can see, during this pullback, pretty much exact, Bitcoin has rallied. It's been weak, though, in my opinion. In my personal opinion, one reason we started shorting last week was because I kind of felt like the equity market for the US was holding crypto. Crypto looked weak as hell last week, but the equity market was holding it. Talking a little bit about the equity market, you guys know that we did say ages ago, expect to bounce off your 200 weekly moving average for the Nasdaq. It's done that every single time since 2008 onwards. We're in a very different environment from 2008 onwards. I think 2008 onwards, it's just been QE, stimulus, stimulus, stimulus. Let's pump money into the economy. Now we're at the fallout of that. I mean, this is my concern moving forward. So we still think there's lower prices to come. We'll get into a little bit of the macro and why this is. But just to recap, the issue that you've got now is the dollar's now gaining strength. And of course, the crypto market is rolling over. Now, personally, I think we end up putting in new lows for Bitcoin and the rest of the market. I think that an issue we've got this week is if we, and looking at the futures, it looks like we're already sort of starting to see a bit of a roll in the futures. The UK market's not doing amazingly. Saw some pretty significant moves in the 10-year yield, which is interesting, meaning bonds are going down. The dollar's regaining strength. Asian market ain't looking too hot, although some of it is. The Nifty 50 is not, the Shenzhen index is actually doing all right. The problem that we've got is if the NASDAQ and that starts to roll, which looks likely, by the way, we had this neckline here that we were looking at in regards to, okay, we've already got it. You're rolling at this neckline. So you're deviating, is this a roll? And the thing is with this, something that we've maintained, and everyone's talking about now comparing, this to 2008, 2000s. We've been doing that for a long time now, or months now on the show. You always get a sort of relief rally before then a further sort of continuation to the downside comes. If that happens, what do you think crypto is going to do? This is why we've maintained a real bias that we're not accumulating now. We're going to trade. We're going to make some money. For anybody interested in doing a little bit more of that, there's a link to my Patreon in the description. It might not be for you. At the end of the day, we want people who want to join, not feel like they have to. We've really maintained a non-accumulation bias. And people go, oh, well, it's so cheap right now. Some altcoins are 80% down. They can go another 80% down. I'm not saying they're going to, but that's a trap that I found myself in before, certainly in 2018. And when things were selling off, I was going, wow, what an opportunity. Things are 80% down, only for them to, roll another 80%, or in some cases just disappear. And that's something that we're not getting, we're not falling once bitten, twice shy. So we've done a bit of recapping. There's been lots going on, like I say. Crypto's essentially rallied. We did give you, and the sniper was pointing this out, this rising wedge. So I actually wasn't convinced on this, to be honest. I thought crypto looked strong and actually kind of saw it potentially doing something like this and coming and retesting these highs before then that further down leg. But that really relied on lots of things. Some warning signs that we had was if you look at the daily, and we did say and remark on just how many times you failed, and look at the wicks around the 24K range. Look at these huge wicks here. Marginally higher highs, massive selling wicks occurring. That should have been a warning, and then we had the roll. For me, this is probably likely that this was just shorts getting filled, big shorts getting filled. We were shorting. We're actually short on a number of altcoins. Just to name a few, Rune and Matic. Got plenty more out there. Obviously, I only share my setups and entries with my Patreon members, but I will post some results on the shorts. Because you can make money on this market in both ways, and you can actually, providing you're not using a lot of leverage, do it quite risk effectively. So that's really it. When we've broken out of this, you have made your rising wedge target. If you just take the rising wedge from here, you've kind of come back down to it. I still think you're going to roll. I still think Bitcoin's got a bloody good chance of getting to 15K and sub. And the reason being is just because I think the macro is going to persist. Let's talk a little bit about the macro now. We've kind of gone over everything. Also, let me bring up total too. There's something I want to say on, the total market cap. This is still very much relief rally territory. And the thing is with this is if you look at where you've actually ran into, just removing these for a second, very, very common. Oh, sorry, guys. That support flips and turns into resistance. Very, very common. And I think that may be what has occurred here for the total market cap. I think you're at least going to come out and take these and possibly low. We've got targets for altcoins on our watch list that are significantly lower. And I think they get hit. And that isn't positive for hodlers and all this sort of stuff. Look, nobody's more bullish on the longevity of crypto than I am. This is the new tech. This is the new revolution. It's the new asset class. It's going to do amazingly, guys. And you have an amazing opportunity at your fingertips, you know, in front of you. The problem that we've got is we've got to get there. You've got to get there. You've got to keep skin in the game. So right now, for me, it's a defensive game, not an offensive one. But there's time to be bullish and make loads and loads of money. And there's times to be offensive and try and take what you can, you know, and be frugal. This is the time period that I think we're in. I think things get worse. And we're going to talk about why that is. And we've maintained this bias. And by the way, I'm still not right. So people always look for instant gratitude. Let me tell you, chasing instant gratitude as a trader is going to lead to a not so great ending. You know, you're going to be like a jumped up adrenaline junkie all the time. You want to have a plan. You want to stick to it. And to be honest, one reason we've been so successful in shorting this week or last week was because I actually took a break from Twitter. If you want to be a better trader, stop listening and paying attention to Twitter. If you want to be a better person, stop going on Twitter and spending all your time on there, because it's toxic as hell. You got to think to yourself, with some of these guys that have got big accounts, what sort of life do they have? You know, spending all their time on Twitter. You know, I've tried the whole Twitter thing. I still am going to use it from a business point of view, but it's kind of sad in some ways. But anyway, that's a little rant over. Let's talk about macro and some things that are affecting us, and then go on to the fact that we have Jerome Powell speaking at the Jackson Hole meeting on Friday. This essentially, I think he's going to very much reiterate the whole let's fight inflation narrative. And I think inflation's going to be sticky. I don't think it's going to come rocketing down. I think it's going to persist. So let's get into a little bit about the macro and why I'm still bearish. Brits face substantial energy bills increases. Here's what happens and what help could be coming. So this is interesting. For me, and we gave a report ages ago from ITV. Now, ITV I don't think are the most credible source of information, but they were saying that they've done a survey and that it reckoned, and it doesn't have to be this figure, but I know it's going to be bad and potentially somewhere near it. They reckon that 10 million people in the UK aren't going to be able to afford their energy bills. People are already on the breadline. Remember, Lloyd Bank did that survey, and they're going to be the best people to give comment on this. They reckon 80% of their accounts, their clients, didn't have £400 for an emergency. You know, people's gas bills are going up that a year, let alone petrol, let alone all these other things. Is that a time where you want to be investing in markets? Also, the Fed does not have your back anymore. They may do later on down the line, and that's when we flip bullish again. But right now, they are going to let things happen. We've spoken about the yield curve. I've got my own version of this, but this was good from Simon Ree. As you're talking about the fact that the yield curve inversion does tend to predict major black swan events. This is another concern that I have. So this is a bit of a far out one, but it's something I price in when I'm looking to invest. Does the risk to reward outweigh? Does the reward of me putting my money into markets outweigh the risk right now? Nope, nope, and nope again. And this is one reason, because I think there's going to be potentially another March 2020 or who knows what. We've got the Ukrainian Independence Day coming on the 31st of this month. That's going to be interesting. I wouldn't be surprised if something kicks off around then, but that doesn't have to be it. It could be the Chinese housing market. Who knows? So this is another risk factor. A total halt in Russian gas flows towards Europe in winter with a substantially harsh recession is estimated to hit company earnings by over 20% versus current analyst estimates. So this is the thing. I think people are being too bullish right now. And you'll go, oh, well, Twitter's bearish. I hate it when everybody goes bearish, because then I'm like, oh, maybe I should get out my shorts. But at the same time, I think in regards to people, this rally being priced in, it does not only does it not make any sense, I think people are giving it too much credibility. They're being too bullish on this being a bottom and, oh, let's get in. One reason prices have gone to where they've gone is because people have been FOMOing in. How many people do you know, including some people that are watching this right now, that FOMOed into the crypto space last week? This is why you want to have a long-term, self-driven outlook, which is what I try and do. I tend not to listen to other people unless they're people I know have real credibility, and certainly Twitter. And it sounds very contradictory as we're looking through Twitter, but these are some guys, by the way, that you should follow. Macro Alf is fantastic. Also, this guy I bring up quite often. I'll just hover that so you can see. and then obviously FX hedge. So we've spoken about this. Inflation is hitting the average Joe very bad. Again, talking about this point here. You know, this doesn't. March 2021 was everyone had money to just pump into markets. Now that's not the case. And in fact, if you have to choose between buying 100 quid's worth of Bitcoin, you know, every month or every week and paying your electricity bill, it should be a no-brainer which one you're going to choose. And that's going to trickle through to markets from a consumer point and then a sort of corporate point in regards to interest rates and liquidity and everything. So we spoke about the Citigroup forecast, 18.6% inflation. This is insane. I don't hold Great British Pounds, I don't hold euros. I hold all dollars. I've been saying this for a while. Many of you have been going, well, how can you do that? You know, you live in the UK. Okay, yes, I keep what I have to pay on a day-to-day basis. I'm happy to get rid of my pounds. But I hold dollars because I think that the dollar is going to become it still is the dominant currency, but it's going to gain the most strength. I think there's also politics that are kind of behind interest rate hikes and a number of other things, and the US kind of beating their chest and going, you can't move away from the dollar, we'll destroy your economy, or, you know, et cetera, blah, blah, blah. So this is from FX Hedge. US mortgage lenders are starting to go broke. Independent mortgage lenders are seeing their credit lines cut, BG. Talking about the end of the week so that we can wrap things up, just some things to look out for. We've got Jerome Powell speaking at the Jackson Hole event in Wyoming on Friday. Lots of people just essentially saying, look, he's just going to basically reiterate his view that he's going to continue to fight inflation. This is going to spook markets again. And we're going to start that next leg lower potentially. For me, I think we've already started it. You know, I wouldn't be surprised if we get some sort of a ledge and then we capitulate to the downside. Then we maybe set up some sort of head and shoulders and then see that further continuation down sort of 15K and maybe sub. And that's going to be, you know, do I maybe dip my toes into altcoins? We'll see what the lay of the land is when we get down there. That's all I've got for you in this video, guys. Thanks for having me back. I got some absolutely fantastic messages from you guys, wishing me all the best on my week off. It really means a lot to me. You know, at the end of the day, you guys are the reason I do this channel, and I'm happy to have each and every one of you on board, and hopefully we're all learning and growing together. I know I certainly am. All I've got for you, if you've enjoyed the content, a like is always appreciated. So there's a comment, and if you want to give us a share anywhere, that's always much appreciated. Thanks a lot for watching, guys. Catch you in the next one.